got it right in under the bell, Straza. I don't know if you noticed that, but my camera wasn't working and it went live right when we went live. That's perfect. So anyway, hey everybody, welcome to the Flow Show. It's Monday. Straza, how you doing,
Yeah.
buddy? We didn't do this last week. I missed you.
Well, we were just talking about how we miss so many shows because we miss so many Mondays as market people. So it's good to be here. You
Yeah,
know,
we maybe we should have thought about this early on, but a lot of market holidays happen on Mondays. You and I tend to sometimes do long weekends where we don't, we're traveling on Mondays, and so sometimes the Flow Show gets lost in the mix. I think we need to make this a Tuesday thing. We'll talk to upper management, see if we can get the schedule rearranged.
talk to the producers.
Wait, who's upper management around here? I don't even know. Anyway, so this is the Flow Show. Thanks for tuning in. If this is your first time here, me and Straza, we like to kind of show you how the sausage is made. Straza brings some trade ideas to the table. We look in to see if there's an options way to express the bet, if there is one at all. Sometimes we don't have any trades, and that's okay, right? As traders, as independent traders, Straza and I, and many of you who are watching this, we don't have to trade. Right? There's no one saying that you have to put a trade on every day. There's no, you can't force the market to do what you want it to do. We take the opportunities where they are. Most of the time, we come up with trades though here, and so let's get into it, Straza.
Hold on.
I know you didn't watch any football this weekend, and all you were doing was looking at charts. So I'm sure you're full of great ideas.
I watched so much football. I was so excited. And then my team, the Giants, came out and made me so sad. Just like right away, week one.
It's a recurring theme.
It's like golf. Like that's what keeps you coming back. Those kinds of emotions. Like you just
There's plenty of room on the Buffalo Bills bandwagon if you want to jump on. Lots of room.
I have too many teams already. I'm trying to adopt the Miami stuff as much as possible down here and live like a local. So
Anyway,
so
moving on.
first of all, to your point, we should pat ourselves on the back because sometimes that's the best thing that we do is
Not trading.
yeah, right, and sit on our hands. I think what was it, 2 weeks ago we were on here and we just talked for a little while and said we're not going to do anything. That's great. This is the kind of market we're in. Last week the selling accelerated to the downside again. Like we're seeing really, really big moves, big daily sell-offs. When the bears take control of the tape in the middle of the day, it's like, look out, right? Semiconductors are selling off over 6% like every other day, it feels like. And those are your market leaders. So things have really changed and we should act accordingly. And when I look at my portfolios today, I'm like, you know what? I want to be long more puts. I want to be long less calls. I want to own more real estate and staple stocks and bonds. We both wrote about bonds, Sean. When's it like in the same week? JC too, the other guys too. Like everybody's out here writing about bonds. I think we have to pay attention to our own behavior. There's so much information in that. I'm thinking we should look for some put opportunities today.
Well, I'm open minded. I'm open minded. If there's an opportunity that presents itself, we'll look at it.
So
My initial thought is with VIX still north of 20. I think finding some affordable puts might be a challenge,
yeah.
but always case specific. So let's look at each opportunity you got.
Let's run down real quick. Here's what's going on in the broader market. We have the S&P 500. Um, Big rally off of the, let me clean this up. Big rally off of the August 5th low, right? What do you call it? What's
Oh, the yen yo-yo.
yen yo-yo? So let's whop it out from the yen yo-yo, right? Look where we are, Sean. It's not a
By the way, I don't remember who said it, but I heard somebody else in the wild call it a yen yo-yo recently. I'm like, hey, I came up with that. That was my idea.
See?
Maybe it's catching on.
Well, we have reach. We have reach, my friend. So look, S&P 500 VWAP from the yen yo-yo day, right there. We tested it on Friday, trying to get back above it today. Looks like classic inside day today. Maybe the bulls can take control for a day or two here, hold this VWAP. I don't think that's going to be the case though, and I think look out for this afternoon. Let me show you why. I always look to the leaders for information. So here's the Nasdaq 100. Forget this VWAP for now. From the yen yo-yo, Nasdaq 100 blasted right through that VWAP level already last week. Right, so this will be an inside day below it. Something like technology, speaking of leaders. Let's just do the same thing here. See, I have the VWAPs anchored from the pivot highs too. This is always a good exercise. Anchor VWAPs from the pivot highs, and it's a great tactical tool. Below the VWAP from the August 5th lows. Semiconductors, Nvidia, it's all the same, right? So the best stocks, the bears are in control of the short-term trends, for sure. I think we definitely retest lows. And then the question is like, what does that look like? So if the NASDAQ were to fall another 3-4%, we're back towards those levels from August 5th, right? And then I think that's the next big test.
One thing I'll add, and I'm not the expert technician that you are, but I will notice, I'm noticing on all those charts you just whipped through, you're showing how we're below those VWAPs, those anchored VWAPs. Additionally, we're below the anchored VWAP, but if you notice, I think in every one of those charts, the anchored VWAP is also turning. It was moving up until about 4 trading days ago, and now it just finally kind of rolled over a little bit. That's significant too.
That's another signal that we use. We scan for that, the slope of the VWAP from the pivot highs and pivot lows. It's actually a great tool. 100%, Sean. So I think for now, right, big green candle today. I'll come on and sound different maybe tomorrow, right? If NASDAQ or something reclaims one of these big VWAPs. But for now, I think we have to bet on indexes retesting the lows and then ask ourselves, how does the market react when we get there? And then make decisions after that. So,
okay. All right.
Good time to either add some short exposure or sit on our hands. Let me show you one that stands out. I think like you could get cute and look for opportunities in something like industrials or financials, but that's really like leadership space right now, at least in terms of the offensive groups. Look at Square here. We'll do the same thing. VWAP from the August 5th lows, just blasted below it. Seems like a pretty well-tested area. You know, I would like this more if it was a red candle today and we were like taking out the lows from Friday.
Yeah.
61. But man, this really looks like a top, Sean. A top within, look, if you zoom out, it doesn't get better, it gets worse. It's a top within a mess.
Okay. This sort of already answers my question, but I was going to ask you do you have a relative strength RSI chart on that somewhere available?
Yeah, totally.
I'd like to see how that's performing relative to its peers. I mean, I think I know the answer looking at that longer term chart that you got there.
So this is RSI, but let's look at the relative strength line. So let's look at like Square relative to the S&P 500. Nasty.
Yeah, it's been a leader to the downside.
Yep. And then look,
these are the types of names we'd like to be short, for sure.
And then sideways on relative terms since June, this thing's just ready to blow out to the downside. These are going to keep lagging. When we retest the lows, stuff like ARK, small cap growth, speculative tech indexes, they're going to be some of the worst hit or hardest hit. And this name should be a part of that.
All right. Well, we don't need to bring up my chart, but I'll just tell you quickly that I'm looking at the implied volatility in the options, and it's not that expensive. So we can potentially play this with puts.
You surprised by that?
I am a little bit surprised. Actually, no, I'm not. It's not surprising. Here's why.
Yeah.
Square has been, if you should zoom out on your chart there, or you got a pretty good zoom out chart. I mean, it's been in a downtrend. I mean, more recently, I know it's been in the longer term downtrend, but since March, so basically all spring, it's been in a downtrend. But there hasn't really been any scary. I mean, I guess maybe you could say that early August plunge, but everything was plunging then, right? I mean, I don't feel like it's had a moment where it's freaked anybody out yet. Right. And that's when you would see volatility spike a bit. It's kind of, it hasn't broken the August 5th lows. So
it's rangy, even though it's down, like you said, from the March highs, it's in the 3% drawdown. It's rangy.
Yeah, it's rangy. And we're well off of the August 5th lows, which at least for short-term traders is probably giving them, kind of a pause and relief, and so they're not super freaked out. But if this thing trades back down, to 56 or 57, people are going to start thinking, oh, that low on August 5th, that's not the low, and then we're likely to see volatility rise again. Which, if we were long puts in the situation, that would benefit us because we would be having the direction right, and B, volatility would be adding some juice to those puts. So if I look in. I feel like October options is too soon. They only have 39 days expiration.
Hold on. I think that's worth discussing because there's 2 ways to do this. You can bet this is a big topping pattern, right, that began on the reaction rally off of the October lows last year, right? Big top, and you bet on like downside to here, right? The lows from last year, which is a massive move. That's a big move. And shorting is hard, right? Or you can do this really tactically, right? And you bet this top breaks and you get a move back to, I don't know, lows from August. That's 10%, Sean. Is there a way we could craft a trade to win just on a retest? Maybe you sell a double on a retest or something, and then you could let one ride. I don't know. But you could have two downside targets here that both make a lot of sense for different time frames.
I got a better idea for you.
Give it.
This will take a little bit of position management, but I'm thinking October options are too soon. They expire in 39 days.
Yeah.
The next monthly expiration we have to work with right now is December. I'd prefer to go to November, but I could work with December. So check this out. We could buy right now the December 55 puts for, let's call it 340 if we pay the ask. 340. That gives you about a 25 delta right there. Now, here's what I'm thinking, Straza. If we buy the 55 puts here, pay 340 for them.
Yep.
And if we get the retest that we're looking at, if it gets to, what is that, 54? Is that the low?
Not even. Yeah, 50, 55, really.
Okay, let's just call it 55 then. If we get to 55 and these calls go basically at them, or sorry, these puts go at the money, instead of selling half of our position, maybe what we do is, what's that next target? 40? A little below 40?
38 and 3/4, 39.
Maybe what we do is when we get to 55 or below, then we sell the 40 puts, because those things will probably be at least double what they are right now. They're trading at 61 cents. They'll probably be traded $1.20, $1.25. We sell those out of the money puts, creating a vertical spread, but we got some extra juice there, reduced our original cost, and we got downside participation all the way down to the November lows.
I love that.
I don't know. I think because what the reason why I'm thinking that, Straz, is because when we get to 55, that's when volatility is going to be rising, and perhaps making trading at a level that's the highest it's been in a year. That's a great time to sell out of the money puts, right?
And then why sell out of the money puts instead of?
So, okay, good question. Typically speaking, with options, especially with put options, you will see in volatility terms more expensive out of the money puts than you will out of the money calls. That's not always true, but that is typically true, right? And if Square is threatening to make a new cycle low here, or at least new low for the year, there's going to be a lot of premium in out of the money puts because people are going to be getting scared. They're going to be hedging their longs. Some people who are making tactical bets are going to be getting aggressive. So there will be a lot of juice at out of the money puts. So I think obviously it depends on how soon this happens, but if we get a move down to that August 5th low in the next month,
and if we collapse back there, right, in a high volatility way,
right, I'd be willing to bet that those 40 puts will be at least double what they are right now.
Yep.
$1.20 maybe. And I just think that would be a good position to sell. Yep. Just to lower our cost, right? We pay $340 today.
Yeah. And you stay long the puts.
You stay long the puts. Yeah. Still stay long the 55 puts. And then now you have a potential that spread, if it goes all the way to those November lows, that spread full value could be worth as much as $15, in which case our net cost is, I don't know, $2.50, $2, depending on how much we get for that 40 put that we sell.
Yeah, but what happens to the short puts when we're falling back towards those old lows?
They will rise in value, right?
Yeah.
I'm saying if let's say Square has a total collapse. I'm not saying that's going to happen, but if it does, the most that spread could be worth is $15 if we're below $40 at December expiration, right? Now, likely what's going to happen is if we get to 40, I'm probably just going to take the spread off and book the gain. It won't be worth $15 because there'll be some time value left in those 40 puts that we're short, but probably sell the put for $10, $11, depending on, again, the timing of when it happens.
Right.
That's a great return on a trade that maybe cost us net $250.
Yep. No, I love it. I love it.
So I think buying the puts today while volatility is cheap is a good play.
Mhm.
And then, later on, if we get the retest of the yen yo-yo, then we sell the puts later on, creating that vertical spread, you know, taking risk off the table, right? Because you wanted to take risk off the table, maybe sell a double, right? Sell half a double. Nothing wrong with that. But I think selling the 40s out of the money means we have a potential for bigger gains if we get the big move we're looking for.
Even better.
Yeah. All right. How do you like that?
I'm into it.
I'm into it too. Hey, look, and the reason why I'm into it, we kind of mentioned this at the beginning. We breezed over it a little bit, and this is like a muscle that we're not used to exercising, right? Straza getting short. I mean, it's been like a bull market seems like forever, and the bear markets last about 5 minutes. So our bear market muscles are need a little toning up. But we like this trade. At least I like this trade because not just because we're making the bet that Square is going to fall because we think Square is going to fall, but it's been a downside leader for a long time, right? Its relative performance against the SPY, against the S&P is abysmal. It's been trending down. I mean, if you zoom out on that chart you got up there right now, I mean, if you zoom out like a year or two, I mean, it's been in a downtrend for a long time. There's been no reason to get overly excited about this stock if you're a bull since middle of 2021, right?
And an 80% drawdown, Sean.
So
80% drawdown. Dude, every time I go buy coffee or something, or my barber gives me a haircut, I'm using Square. How is it this bad? Literally, every time I leave my house, I have to swipe my card on something that Square owns, I feel like.
that's a good question. I mean, I think it's just maybe one of those names that just got ahead of itself, over exuberance when the adoption cycle was hitting its peak, right? People just figured, oh, this is just going to print money for the rest of its life, but that's not how these things work. And it's got competition from Venmo, it's got competition from PayPal. It seems like every banking institution is coming up with their own money changing app, right? There's the Zelle out there, and I heard of some other new thing coming out soon. I think that Amex is doing. So there's competition.
Here, I want to say one more thing. You're right. We're looking for this, and it does feel funny. It feels different because this could very well happen too, right? And we dig in here, and this is one of those failed tops. We love failed tops, right? We haven't seen many of them lately. But this is probably the equally likely scenario, right? Price digs in here, we rip higher, great. We're going to do well in that environment. This trade won't, but everything else we have on, most other things we have on will. So I think it's just prudent to have more positions on that benefit from another downside move. The bears are in control of the tape right now.
Yeah, no, I don't disagree at all. One final piece we should probably discuss, though. If we're wrong, or where do you think we're proven wrong on this trade? Is it
Quickly, dude.
You think 67? 67 would be the stop?
Let's zoom in here. It's a great question.
Or would you be even more aggressive?
I think
what's that VWAP price there?
I think you could be that aggressive. I think you could close it on a VWAP reclaim. It could happen today. 62 3/4. Called 63, the highs of the day. And then I think definitely you don't want to be long if we're back above the VWAP from the highs a few weeks ago. And that comes in around 64.70.
All right. So I'm thinking 65 feels like a good price. And that's a tight stop given the name, but look, I mean, if we're going to be right, I think we both agree if we're going to be right, we're going to be right soon here. And no sense in sitting this thing and letting theta drip away the value of our puts while we wait for a resolution. If we're gonna fall, it's gonna happen soon.
I like to be more, I guess, vigilant in managing short positions anyway. I'll take them off sooner. I'll sell, take profits quicker. So I think that's the right thing.
All right, 65. Yeah, I like that. And by the way, I see you, John D. I see you saying the name of this company is Block, not Square. Listen, we know. But you know what? It'll always be Facebook. It'll always be Google, and it'll always be Square. Sorry.
Yep. No, we're not budging on that.
And it'll always be what was it? The Long Island Iced Tea blockchain. What was that?
Yeah, that's right. And what is this GE Aerospace? It's General Electric.
Yeah, it's GE. Sorry. We're old school, I guess. You must be a young guy, John, and that's cool. Good for you.
They keep changing them up on us, Sean. And if they would just leave the names the same, things would be so much easier over time.
Absolutely.
Yes.
All right, guys. He's Steve Straza. I'm Sean McLaughlin. Thanks for tuning in to the Flow Show. We won't be here next week because
Nope.
you, me, and JC will be traveling all week next week, taking care of business. So there will be no Flow Show next week. There might not even be any morning shows next week. We'll have to talk about that. I don't know what the deal is, what the plan is.
We're going back to Cali.
But hey, if there's anyone in Huntington Beach, California, attending Future Proof Conference or just lives in the area, like our good friend Brian Lund, come out and say hi. Also, me and Straz are going to be hanging loose in Chicago for 4 nights, end of next week. So if you're in Chicago, come on out. We're going to a Cubs game. There'll be opportunities to hang. So reach out to us. We'd love to see you. All right. That's all we got. Thanks for tuning in, everybody. Good job, Straza.
All right. Happy Monday.